Welcome to A&J Financial, soon to be Moonshot Financial. Yes, you heard it right, Moonshot Financial. I got it in. It's coming. So Moonshot Financial is gonna be your moon ticket to the moon. All right, get your finances right. But let's go on to the lesson today. Okay, strategy first. What is strategy? Strategy has a lot to do with discipline. And why do you need discipline? Discipline is everything in trading. When you're in something, before you press that buy button, you have to have a couple things already set in your mind. How much am I willing to lose? How much am I willing to make? All right? And that's pretty much it. The rest is the chart. When the chart tells you to leave, leave. What are things that the chart might tell you? A negative MACD. RSI under 50. Right? What else? An engulfing red candle. Green, green, red, and then red engulfing. Swallows up the rest of the candles. That's pretty much a ticket to leave. Or you're in profit past the Bollinger. All right? Now, let's talk about investing. Investing. We're talking about investing, not day trading now. That was day trading. This is investing. Now I'm going to go over a couple companies. I want you to write them down. Go to Yahoo Finance. Go to Seeking Alpha, Finviz, Ask ChatGPT, Ask Claude. Get information. Here's some. TSM, AMD, Intel, NVDA. Here's some high beta stocks. Micron, Tesla. This is a big one. ASML, very expensive though. SMDK, SanDisk. Here's some that are not known so much. Oklo, NBIS, AAOI, Poet. All right, you got some homework there. So we got TSM, AMD, Intel, NVIDIA, Micron, Tesla, ASML, SanDisk, Oklo, NBIS, AOI, and Poet. Now let me tell you something. TSM, Taiwan Semiconductor, whatever. TSM doesn't exist without ASML. ASML doesn't exist without TSM. NVIDIA doesn't exist without TSM. TSM makes chips that your computers use. ASML makes the product that TSM use. It's like a revolving door. You'll figure things out like this. Tesla needs Micron because of the chips. That's why he's trying to make his own chip with the upcoming XAI, which will be connected to what? SpaceX. Which will be connected to what? To X, which used to be Twitter. Right? That's some information. Now, investing. What will you be looking for? Right? Write it down. Revenue. Product. You'll be comparing cash flow with debt to figure out what? Intrinsic value. PE ratio, beta percentage. All right? Revenue, how much they're making. Product, what are they producing? Cash, how much they have on hand. Debt, to combat how much cash they have on hand. Which then, intrinsic value, are you overpaying or underpaying? P/E ratio, looking forward, how long to get your money back? What's the company worth? Beta, how much does the company go up and down? It might be 0.05. That company barely moves. It might have high dividends though. So people who are retired or want to save up money might want to put all their money into that. Yeah, they'll get 1% maybe every week, every other week, 2% maybe on a great week, 2%, but they get their dividends because they care about protecting their money and making that extra little cash, right? Now, psychology of trading. What's the first one? Discipline. Strategy. Second. Third, execution. These three are essential for winning and losing. Discipline, strategy, execution. Discipline, you say you got $1,000, you're going to split it up into 5. You don't split it up to 300 because you lost on the first 2 trades, trying to get a little bit more. You don't split it in half. You wait 30 days, right, of following your rules, and then you want to redo the rules, you redo them after the 30 days. You don't break it for nothing. Because once you break it, your brain, right, which it's like it has a mind of its own. If I say this morning, I say, well, I'm going to stop when I make $350. When I hit, if I in my first trade, I make $350, I'm not trading no more. What I'm going to do is I'm going to investigate companies. I might take a swing trade, but the day trading is over. If I say overall, I'm going to make $400 and I make the $400, your trading day is over. If you say 1,000, that's it, it's over. What happens is, if you keep going, then you might take a loss. Cut that in half. Then you'll say, oh, if I get back to my initial price, I'll stop. Then you get there, you go, I'll get a little bit more. Then you lose some more. Then you lose, and now you're zero. You just broke even, right? You say, I gotta make a little bit of money. Let me just do one trade. Boom, that one goes bad. Now you're in red. Now you're frustrated. Now you're like, oh, but I was up 500. How am I down 200? Now here comes the revenge trade. I'm going to put it all in one watch. I'll make my money back. You know how many people have what I call exploded their accounts because of this. They're no longer with us. They're not dead. They're not trading though. They're gone. Gone. All right? And if you don't listen, this will happen to you. And if you don't want to, then try it. Try it yourself. Do what you want to do. But I'm telling you, because these things have all happened to me. And I've gathered enough information to know that what I'm telling you is right. I want you to win. I don't want you to lose. I want you to win. And if I fall in a hole, I'm telling you that there's a hole there, so you go around it. Some people need to fall in the hole multiple times. But one day you'll fall in the hole and you'll never get out. Okay? All right, now let's continue. Let's continue. Earnings report. If you're about to buy a stock, look to see if the earnings is that day or nearby. What happens during earnings? Usually a crash or it rises up immensely. I tried guessing. And how did I do this? It wasn't much guessing, but now I know it was. I would go into, you could look at it, Options.io on Google. This tells you how many people think it's going to go up, how many people think it's going to go down. What's a strike price, which means what's the price that they think it's going to go to. So when it goes to that and it passes it, they make profit. Up or down. Put or call. Put down, call up. Now I'd see, wow, 1.5 million say it's going to go up with a strike price of 120 and it's at 110. Earnings is coming up tomorrow. Right? Let me see how many times they beat earnings. They beat it. They beat it 20 times in a row. What's the odds that they're going to miss this time? Very slim, right? I'd buy the stock. They would beat the earnings. Not only would they beat it, they'd destruct it. They'd say 1 billion, they'd make 3 billion. They'd make, say, 2 million, they'd make 10. They'd say cash flow's gonna be at $500,000. They'd say our cash flow is $2 million. What happens to the stock? It crashes. Then the one that I didn't pick, because the last 3 earnings were missed, they missed again. But on the phone call, the guy says, we're doing a buyback program and we're about to start buying right now. We're going to buy 1 million shares. Boof, it goes up. Or they say, we lost money this time, but next year, we promise you. And whatever they said, they talked a good game. The investors loved it and they start buying. This tells you that that is truly gambling. Okay, unless you have insider information and you know what they're going to say. I know somebody who made on a $600 put. This guy made over $100,000. But I guarantee you he had insider information. And I'll tell you how it happened. It was a pharmaceutical company and they were on stage 3 of cancer medications. The cancer medications were working, but that day on earnings, they were going to say that the 3rd trial failed. Woo, the stock crashed. He had his put way out there. Not only did it hit it, it hit the limit for each put, which was about $6,000. He killed it that day. It could happen. But what I call these long shots are home runs. And sometimes when you go for the home run, you're going to miss a lot. And those misses are going to hurt. So, pretend you're playing baseball. You go for the swing for the fence and you miss. And then there's this guy who punts the ball. Boop. He gets the first. He comes again. Boop. He punts again. He gets the second. Every once in a while, he'll see a nice one coming. And he'll make it to 3rd. Now, he might not always get the home run. But he always gets on base. And that's what we're trying to do here. We're always trying to get on base. And not strike out. All right? You want to split your stocks into risk. High, medium, and low. Low, just to compound your account. Keep that extra little money coming. I'm going to say SCHD. I'm going to say things like Morgan Stanley. Right? Look at some of those ETFs. I'm going to say, off the top of my head, things like LLY, Eli Lilly, Pfizer. Yeah, you might not get that much, but they're safe. A bomb explodes, nothing happens. Little bit of medium, QQQ. The ETF moves. That's kind of medium to safe. Then you got NVIDIA. You got Palantir. You got AMD, Intel. These are medium. A little bit higher because they're high betas. You check beta by going to Yahoo Finance. High betas are things like, I love them, but I call them medium to high. Micron, SMDK, AAOI, NBIS, Oklo, right? You got your portfolio like this, something's always gonna hit. Now, if you notice, I do more tech stocks. The ones that are gonna be safer are Charles Schwab, Morgan Stanley ETFs, and what we call pharmaceutical companies, right? Novo, they got the fat drug. Now, why do you want to do this? If you have everything in high risk, like sometimes I do this, but I'm a little bit farther in trading, especially swing trading, so I'm able to manage the risk, And I'm used to seeing now my portfolio in the morning be up $500 and then in a swing of a second be down $900, then back up to $800, then back down to $400, then break even. Some people, if that's the money, if that's all the money you have, you might not want to do that because you'll be constantly looking at it. You'll be worrying about it. And if you put money in a stock and you're worried about it, you put too much. You need to put and understand that you won't care about it. Of course you care if you win or lose, but there won't be fear. You need to take fear and emotion out of the picture. All right? You want to become a seasoned investor that does not worry about red or green. What you worry about is forward projection. No hoy, no mañana, la semana después, el mes después, el año después. You want to worry about the future. Because when you worry about only now, then that P&L kills you, kills your emotion. All right? Now I'll be coming out with further videos. All right? The next one's going to be in Spanish again. God bless you. Have a great day. Today is NVIDIA earnings. It should be any minute. Also, AVEX is going to be today earnings. And there's several others. So I'll keep you posted. Y'all have a great day.